Hello and welcome back, and today I'm going to talk about the US dollar because right now the US dollar is superbly weak. It's had one of the worst starts to the year that it has in years, and it's falling quicker than it has done in decades. And over the last few months, we've seen President Trump threaten to fire the chair of the central bank in the US, known as the Federal Reserve, multiple times. Every time he threatens to fire Jay Powell, the chair of the Fed, the dollar takes a dip. But why would he do this? And why does a weak dollar even matter? This isn't just about US politics or about a slightly weaker currency for those in the US. It's going to affect all of us, from the price that we pay to put petrol in our cars, to our summer holidays, and to the overall stock markets. Let's take a look at what it means for you. So the dollar is the world's most traded currency. And when we say it's fallen in value, what we mean is it's fallen in value in comparison to other global currencies. So it's compared against the likes of the GB pound, the yen, the euro, and so on and so on. But because it is the world's most traded currency, it's also used to buy lots of different globally traded items. Think things like gold, like other raw materials, and like other commodities. So when it gets weaker, the whole financial system really feels it. But what else happens when the dollar weakens? Well, it can affect as well imports and exports to and from the US. So if you're in the US and the dollar gets weaker, then what this means is that imports become more expensive because the dollar is weaker compared to those other currencies in which you'll be buying those goods and services. Conversely, what it means is that exports get a little bit cheaper for the rest of the world. Because the dollar is weaker when they're buying US goods, then generally what we'd see is that they would be a little bit more affordable. But this can mean that it takes more dollars to buy things like oil, like gold, or like tech components if they're coming from the US. And all of this can mean that actually we see a drive in inflation within the US. So you might think at first glance, well, surely you'd want a strong currency then. Why is Trump potentially doing things to mess around to reduce the value of the dollar? Well, it could have some benefits. First and foremost, come back to that idea of exports. If exports get cheaper, generally what we'll see is that there is a boost in demand across the globe and more US goods and services are bought. This is good news and ties in with Trump's overall political agenda that he wants to sell more US-based goods. This also helps with another point, which is the trade deficit. So at the moment, the US, and indeed many other countries across the globe, imports more than what it exports. Trump has long since said he doesn't like this. Now, there are pros and cons to having both a deficit and a surplus, where you export more than you import and vice versa. But he really wants to correct this. Now, of course, if exports go up because of a weak dollar, what this would mean is that potentially the trade deficit would start to come back down. Another tick in the box of his political agenda. This would also mean that competitors may well be a little bit hurt, because if their exports get more expensive, think the likes of China's exports becoming more expensive in comparison to US ones when the dollar is weak, then let's say us here in Europe are potentially more likely to buy US exports than Chinese ones if they become cheaper or more affordable. It's not necessarily going to pan out like that, but it's once again another appeal to try and hurt some of those that Trump deems who have hurt him. And last but not least, what all of this can help to do is to stimulate markets. And when I'm saying markets, I mean stock markets. Sometimes a temporarily weaker dollar can help to boost US corporate earnings for all of those reasons around exports becoming more appealing and more affordable for the rest of the world. But here's the kind of twist. Trump can't just demand that the dollar gets weaker. It doesn't work like that, which is why he's potentially threatening to fire Jerome Powell, or Jay Powell as he's often called, because that is one of the convenient and easy ways to do it. But Every time he threatens to fire Jay Powell, what he's doing is messing with investor confidence, because really the Fed should be independent of political sway. And him threatening to fire him is, of course, a political move. So investors get a little bit fearful. We see the dollar drop as a result of the announcement, and that is what is feeding a lot of the current dollar decline, as well as, of course, lots of other things that are going on within the overall economic sphere and global geopolitical sphere as well. So what else actually is influencing the dollar going down at the moment? Because it's not all based on Trump just threatening to fire this one man. Well, we've also got his tariffs in play as well. Trump's tariff moves and general stance on global trade is reducing overall confidence in the US and therefore the US dollar as well. This globally is causing a little bit of a dip. Another one of the key factors is that what we've seen traditionally is that many governments, many organisations across the globe will hold dollars. It is the world's most traded currency, and in many senses, it's one of the most useful assets to hold. However, as trust starts to decline, as we see more volatility within the US, and as we see more and more conflict within that political sphere, what we'll see is that more and more investors, be it governments, be it major banks, be it other major players in the financial sector, they'll all start to move away from the dollar. They'll start to sell it off in favour of other assets. Think things like gold, perhaps other major global currencies, such as the euro, such as the Swiss franc, such as even the GB pound or the yen. But this all sees a little bit of a slump in the overall value as well. So what are the pros and cons then of having a weaker or a stronger dollar? Well, let's start with the good news, some of the pros, right? Well, firstly, as we've said, it boosts US exports. This can be good for those living in the US because they might see a heightened level of demand for their goods or services, but it could also be good news for the rest of us across the world if certain goods and services are able to get to us for a lower price. It's not necessarily a bad thing. It can also be a real tailwind, if you like, for US investors in international markets. If they're using their dollar at a cheaper level to buy other assets, they may well be able to benefit in future if and when the dollar comes back up. However, the bad news is that it can increase those import costs into the US, which may well raise prices in the US, which could cause further inflation. Now, this all sounds very US based, but that isn't great news for the rest of the world. The phrase goes in the financial arena that when the US sneezes, the world catches a cold. If we see inflation go up again in the US, we may well start to see a ripple effect across the rest of the globe as well. This ties in with the idea that the US dollar is also used to buy a lot of internationally traded goods and services. Again, think oil, think other currencies, and think major commodities too. If we start to see their price impacted by the changing value of the dollar, this could have further ramifications on our own economic systems, including inflation too. A weaker dollar could, last but not least, rattle investor confidence. As it stands, the dollar has been a real linchpin, strong point, real currency of stability for a good 100 years, perhaps more. Some would argue more, some would argue less, but there's always opinions, right? But crucially, the dollar does represent some level of safe haven. Now, if this trust gets eroded, what this can mean is that investors flock elsewhere, and it could be across a whole wide range of different assets. Some of these will benefit, of course, there's always winners and losers, but it could well cause a bit of a shift in the overall global financial sentiment and how we really see the dollar. So what will we see as the overall impact then on markets and your investments, no matter where you are in the world? Well, we might start to see stocks rally a little bit on some of those cheaper currency and exports, particularly those notably in the US. But along with this comes a lot of volatility, so just a lot of ups and downs. For some, that's great. For some, it's a lot to withstand and can erode confidence of overall investor belief in those market systems. We might also see some gains on international assets as and when you're converting back to the dollar, depending on the timing. Now, generally, FX trading and really looking at currency movements requires some level of professionalism, some software, and also some know-how and understanding of the system. It is not for the faint-hearted. But there will be some out there that are making serious amounts of money on a weaker dollar and on the back of some of the impacts on the stock market too. And global trade. We'll start to see countries with potentially dollar-denominated debt face some issues. So as I mentioned, it's the world's most traded currency, and many countries hold dollars as part of their overall financial system too. It represents part of their backing, and it also represents part of some of their financing systems if they've taken, for example, debts from the IMF, the International Monetary Fund. Now, if we start to see the dollar weaken, it may well impact their overall stability too, which again, think of the ripple effect. If we see some countries start to be on the brink due to a weaker dollar, then we may well see some changes as well in the overall stability of, let's say, emerging markets and the like. So what does this mean for you then? Well, if your currency just got a little bit stronger in comparison to the dollar, a holiday to the US may well be a little bit more appealing, as it's probably just got that little bit cheaper. Doesn't mean that everyone's going to leap on a flight across the Atlantic, but some may well choose to do so. When we're thinking about investments, if you're holding a lot of investments in the dollar, for example, some may consider diversifying into many other currencies as well. Generally, you don't want to spread too thin unless you have, as I say, real knowledge and know-how on what currencies look like, but it really is, once again, a call and a demonstration of how important diversification is within a portfolio, because we can't necessarily rely on the likes of the dollar to always be as strong as we once thought it was. We might also see some further impacts on the likes of inflation, on things like housing markets, and also things like petrol that we put in our car and the prices of goods and services. This is a bit of a longer term game, and I'll keep coming back with more updates on how this might really impact us here in the UK, for example, across Europe and across other parts of the globe too. But it's one to consider when sometimes single arguments are given for the likes of inflation. There's actually a lot more in play and a lot more going on. We might also see some of these ongoing global risks and political tensions start to impact other parts of the world. Again, a longer game, but always part of that narrative that there's usually more going on than the first look as to what we see in the headlines. So the dollar dropping isn't just a single story. There's a lot going on behind the scenes. Trump might want it, maybe he doesn't, but it certainly seems to be that that's the game he's playing. And it's not just a story of US politics. It affects your wallet, your investments, maybe also your travel plans too, but who knows. Hopefully that's given you a good overview and a bit of a breakdown as to what the situation is right now with the dollar and how it might affect you. If you're enjoying these videos, which I really hope you are, please do make sure that you like, subscribe, leave me a comment, ask me any questions that you might have, and I'll see you soon for the next one.